really important that we begin to change the mindset of young people to know that your vote counts.
They don't understand that the legislative arm of government is actually a co-equal arm of government.
We have an incredible amount of potential.
Whatever it is I was doing, because of my personal DNA, it had to be of an international standard, which is what, seriously speaking, is all about.
Welcome to another edition of Seriously Speaking. You've heard the saying that money makes the world go round. And you've also heard people say there's never enough money to do what you want to do. As the year rounds up, as often, I try to look at the issue of money. This time, I'm trying to help you to understand what money really should be doing for you, little or more. So we are talking about how to make your money work for you. On Seriously Speaking today, I have two experts in the house that shall be trashing this out, so I advise that you stay tuned. When I return with my guests, we'll make it a little bit plainer to you why, no matter how little you earn, you can save money and make it work for you. We'll be back on Seriously Speaking. Yes, welcome back to The Real Show. We're going to engage everything here on this panel, and trust me, if I tell you we want to learn how you can make your money work for you, I'm learning too. I don't have the skills, but I have people who I can always run to, and two of them are in the house with me. One of them I'll describe as a smart money woman. She was here last year telling you about her book and how it has changed the lives of many people. Arese, you're welcome to Seriously Speaking.
Thank you for having me, Auntie.
Again. Of course, my second guest is also a very close friend of mine, to the extent that when I call him 2 minutes and he's here, and when we tape this show, I gave him only 2 hours notice. It's nice to have you on the set, Tola.
Hello, thank you for having me.
Welcome. Now, very straight to the point. First of all, I was asking you, and I wanted to ask you this on air.
Okay.
Did knowledge of finance come to you naturally, or you had to acquire it?
My first degree is in business and management. My second degree is in development economics. So you have those finance courses like in between. And I've just always been interested in the way the capital markets work, the way the economy works. So,
but it's not always a sweet story in the capital market, is it?
It's not. But I think that's a complex relationship, because the thing with Nigeria is, like, most people don't really understand how the capital markets work. Like, we have the mentality of we want quick returns, but we don't want to take any risk. Mm-hmm. And you can't want big returns without being able to take risk, which means you need to be able to have the mindset that I might lose money if I want to also make money.
I like the way Tola is looking at. Tola, you have been managing money for more than 19 years. And what's the biggest headache you have? And how did you end up you started off as an accountant?
Yes.
Right.
In the Nigerian space, let me start from there. One thing I've observed about investors is that we have the tendency, when we invest money in certain asset classes, we sort of go to sleep. We like the passive way of investing. However, because of the turbulence and unpredictability of the markets, it's always very good to pay interest in where you have invested your money.
That's to pay attention, not to pay interest. Okay.
So the whole idea being, you've worked very, very hard to make this money. That's why you can invest in the first instance. Now, when you invest, don't go to sleep. Be on your asset manager's case. If it's your stockbroker, be on his case. If it's your investment manager, be on his case. What are the stocks doing? What are these assets doing? What are my returns? I want to see my statement. When you do that, I can guarantee you, your investment manager or advisor will always...
Be on his toes.
Yes.
But, if you remember recently, in the past, 5-6 years ago, there was this very great interest in buying stocks and bonds and things like that. And everybody was turning, I put 1 million, it became 3 million, Does that say something about our relationship with money? So I want you to define for me, what's money and what's our relationship with it? I'll start with Arese.
Okay, so for me, that obviously happened because, like I said, it's in our nature. I'll just say the word, we're greedy. when everyone, I think it's Warren Buffett that said this, when everyone's running to the market is when you should be sort of taking a step back. It's when everyone's afraid of the market that you should start putting your money in systematically. Why? Because in the points where people are enjoying doubling their money, which was what was basically happening in 2007, 2008, that's when you knew the market was definitely going to take some kind of downturn.
It couldn't cope.
Yeah, it would definitely recruit because it's an up and down thing. But I think a lot of people don't understand that the stock market is not magic. It is, you make returns or you get returns over a period of time. Those returns could potentially be high because it's a high risk investment.
So it's greed that's responsible for that. But is it a function of how we view money? Because for me, money is a means of exchange. Is that correct?
Yeah, true.
And that's as far as we know. So is that a wide enough understanding of what money truly is?
Yes, but within that definition, you can expand it. So, for example, a school of thought would say it's a means of expression. The smart...
I buy a Gucci bag. Exactly. I'm expressing myself.
Exactly. The smart school of thought would say it should work for you. Now, there's nothing wrong in putting your money in the equity market, which is of much higher risk than your bond market or your federal government bond market or treasury bill market, for example. However, if you monitor that risk, you can get out quick enough. Because yes, the market crashed way back, and even though we've
But it also recovered.
Exactly, we recovered.
But people lost money.
And people made money.
People made money.
Look at the people's stock portfolios between the time when the market crashed. People who were investing in GTB at like 9 naira. By the time we were coming out of that bust, their money had basically doubled. Like the values of their portfolios had doubled in a maybe 2-year period.
People lost money. What about the ones that came in late and they lost all the money? I know people who lost money because they heard they were making money. They now put all their money in it, and the next thing the thing crashed.
But I think the fundamental thing is about how we think about money. Let's even remove the capital markets. The fundamental way that the average Nigerian thinks about money is we measure financial success based off of how much we earn. So our salaries or profit from our business as opposed to our net worth. We only think about net worth when we're talking about rich people that are on the Forbes list. And the way we should be thinking about our money is I earn money, and a proportion of that money needs to go into assets that can provide me with an income in the future. So when you're spending, you're thinking about, okay, I want to buy that Gucci bag, but I need to put a proportion of it into assets like real estate, into assets like stocks, so that I can get a return over time. The problem is we think I earn too little, and why should I be investing now? Because I'm not going to make that much, instead of thinking about building it systematically.
When you work in a financial institution that helps to manage money, it's only rich men that you will see, right?
Yes and no.
Okay.
And how do I mean? The smart retail investor,
the
smart retail investor sets aside a portion of his income into either of these asset classes we've mentioned. It could be 50,000 naira, it could be 100, it could be 20,000 naira. And sometimes, with smart advice and the right monitoring and risk-reward balance, you see that person making substantial increase. So, for example, let me give you an example. This year, there's been a stock that's done 70% return year to date.
Really?
The entire equity market has returned 35%.
Please, what area? Oil and gas?
Banking.
Or banking?
Yeah.
Huh?
So the point is, it's not really about the size of what you're putting in, because returns is relative. If you put in 100,000 naira and you're making 20% per annum, that's 120 in a year. If you're putting in 100 million, that's extra 20 million. So it's relative. But the underlying idea is the fact that you recognize the need to invest so that you can make extra income, then you can buy your Gucci bag.
Do you know
I like that.
You know what was actually interesting about that? I was doing a vlog the other day and I was thinking, the problem is we don't understand what it actually means to be wealthy in Nigeria. We think it's about having money in the bank, so we make the wrong decisions. People don't understand that financial...
money in the bank good?
That's part of it, but like he said, you need to be investing it and building assets. So for example, I was saying financial freedom is basically when you get to the point where you've built enough assets that your passive income from those assets can pay for your lifestyle. So your dividend, the dividends from your stock portfolio can buy your ticket to London or can buy the Chanel bag, as opposed to the active income you're working for.
Well, you have to wait for that to happen.
Yes, but we need to do it systematically. We need to be teaching young people especially that if you make X amount of money, you should be putting a proportion of it aside. So even if you can't wait that long for your passive income to start paying for your lifestyle, you understand that that is the mentality. That's when you really made it, not when you hits one big contract and then you spend all the money on things that are not assets and then it's gone.
Okay, I mean, before we did it, had got some people to get some questions together, and I'll take a break so that I can take some of those questions, and he might also have answered it, I don't know. But we'll be right back, and the conversation will continue with Arese and Tola if you don't go away.